Hello everyone, welcome to the channel. Now in today's video we want to answer the question, how much do I need to put into my high cash value life insurance policy? How much do I need to fund it with? Now typically when a person asks me to do a quote or illustration, they would say, how much do I need to pay per month to get $250,000 of life insurance? Or how much do I need to put in per month to get $500,000 life insurance? How much do I need to put in per month or per year to get $1 million in life insurance? Or they may say, hey, I could afford $100 a month. How much insurance could I get with that? So when people ask those questions are centered around the death benefit. So that's a death benefit question. However, if we want to set up our policy for high cash value, for infinite banking, for a max funded policy, all terms to use a high cash value life insurance policy. If we want to set it up for that, then we have to think different. I would challenge you to think different. Instead, you should be thinking, how much do I want to fund the policy with per year, and for how long do I want to do it? Because even though it's a whole life policy or an IUL, a permanent policy, which goes on until you die, you do not have to pay until you die, okay? So you want to ask yourself that question. You want to think that, how much can I reasonably afford? What's the most I could put in per year, and for how long can I do that without affecting my life or putting me in any financial trouble? Because I want to fund it with as much as possible. So that's how you want to think, all right? So when we are setting up a policy like that, how we're able to max fund it is the IRS set what's called a MEC limit. A MEC limit. And the MEC limit is dependent on your age, your gender, and the death benefit. So the MEC limit is a limit that's set that tells you the most you can put in a policy based on the death benefit and your age and gender to not make it not life insurance. It still has to be life insurance. So you can't put so much money into it that it's not life insurance anymore, and then it's going to cause a taxable event, and then you're going to lose the benefit of having cash, tax-free growth in your policy. So the MEC stands for Modified Endowment Contract. So if you put in more than you were supposed to put in based on the death benefit, gender, and your age, then it will become a modified endowment contract, and they don't look at it as life insurance anymore. And now you got to pay taxes. So you don't want to go past the MEC limit. So when we set up a policy and we design a policy for max funded that's infinite banking, we reverse engineer. So instead of starting over here, we start with how much we want to put in, right? So we decide what we want to put in based on our age and our gender, and we will get whatever death benefit it gives us. Because our concern is not death benefit. Our concern is cash value. So we want to put in as much as possible that will give us the most cash value that we want, all right? So we would say, let's say we want to put in 100K for 5 years. That might be what we want to pay. 100K per year for 5 years. And then the death benefit will be what it be, right? So we're reverse engineering. We're putting in what we want to put in instead of them telling us, hey, based on your death benefit in your age, the most you can put in is this. We say we want to put in this, and then you will tell me what death benefit that equates to be in line with the MEC limit. Hope that makes sense so far. So that's what we do. If we want to put in 200K, we can say we want to put in 200K per year, right? Based on our age and our gender, and whatever death benefit that comes out to be in line with MEC limit, that's what it is. All right? We might have a lot of money, and we said we want to put in 1 million per year for 10 years, right? So wealthy people who have money like that, they can put in a lot, right? The only limit when it comes to funding a policy would be the insurance company. The IRS doesn't determine how much you can put in. They only determine the MEC limit, and as I just explained, this is how it works. So we are reverse engineering. We said this, we want to put in that. So if you want to put in 10 million and you had 10 million per year, you could do that as long as it's in line with the max the insurance company would allow. And then whatever your death benefit that comes out to will be what death benefit is. So in fact, what we are doing in this case is we are choosing our own MEC limit, because we did it the opposite way. We're deciding what our MEC limit is going to be, and whatever death benefit that comes out to, that's what the death benefit is be. Because we are mainly concerned about having high cash value, and we don't really care about the death benefit, because we know as we pump our cash value and use our cash value over and over, eventually the death benefit is going to grow when the cash value catches up to it, because cash value still have to be more than the death benefit, I should say, still has to be more than the cash value, because it's life insurance. So when our cash value actually catches up to what our death benefit is, our death benefit is going to grow. So eventually we'll catch up to whatever death benefit we would have had if we designed the policy the other way. Hope that makes sense. But again, the main point I want you to get here is that we're able to choose our own MEC limit because we reverse engineer. We decide how much we want to put in first, and because we're not concerned too much of the death benefit, whatever death benefit that will be initially will be what it will be. And as our policy grows, then our death benefit will catch up, all right? Or grow more, I should say, as the cash value catches up to it. Hope that makes sense. If there's anything you don't understand, feel free to comment in the comment section. If you have any questions at all, or if there's a video you'd like me to talk about, please feel free to leave that in there. Until next time, I'll see you soon.